G'day everyone, welcome back to Pete's Investing. Today is June the 10th, 2023. This is the spot silver price update. We're in a neutral position on our weekly and daily charts and also on the hourly. But we have a bit of a divergence happening on the hourly, and I'll cover that in a minute. First off, on the weekly, we've got a slightly bullish movement on both the price chart and the CCI 150, but they're not aligned fully, so it's giving us this neutral signal. And just be mindful, I prefer to trade when a weekly and a daily are aligned, like they were back here, bullish, or even back here when they were when it was bearish. On the daily, likewise, it's in a neutral positioning, but notice here it's we had this that bounced off this key support at 22.67. It's punched through this minor resistance at 24.02 and heading higher. Now, I'm going to move that minor resistance. I'm going to get rid of that and move this main resistance to that level there, and that's where we've got a key resistance forming at the moment. So just we may see further declines. We've actually got a bearish pin bar there, and it could see further declines from where we are today after a massive bull candle there the previous day. There was a bearish divergence that worked out here versus a flat to bullish divergence on the price chart. Our target area was hit. That was between the 38 and the 50% Fibonacci retracement of that wider range. And that was hit. It actually broke below the 50% and bounced off this support level to the upside. Now, looking at the hourly chart, we did have a separate, again, these divergences are different, are independent. They're not related to the daily or even the weekly. So every timeline is different in their divergence. We've got a bullish divergence on the CCI during back here versus a bearish divergence on the price chart. Now, you can see there we did draw when it broke above, the way I played that, when it needs to break above that channel, you can see there it broke above the channel there. How do we extended it? And that would have been our initial target area between the 38% and the 50%, and it's actually gone and punched through the 50% in that secondary target area. Having said that, if you were trading that, you would now be probably looking at closing out your positions, because now we've got a bearish divergence on the CCI versus a bullish divergence on the price chart. And the way you would trade that, again, drawing a channel between the highs and the lowest candle, which would have been that one in that divergence range, and you place a Fibonacci retracement. You can go to any one of these recent lows. Doesn't really make a big difference. I'll go to that main low there. So the way you would then place a target on that, you go to the when it breaks through this lower channel line, which is only probably next when the market opens on Monday, you would place a short trade there, and your initial target area would be that 23% to the 38%. And if you're really bearish, the secondary target level will be between the 38% and the 50% level. But I always like to take the closest Fibonacci range to improve probability of success in case the price reverses again. Also note as well, if we drew a Fibonacci retracement between, let's call it that low there, and that high, let me just get rid of this previous Fibonacci. You can see there if it broke below that first target area, which we drew, it then gets in a territory of around the 61% of the second target area. And that 61% is always an area to look out for further declines. So it may well just come and bounce in that area, in that first target area, and then bounce from there possibly. But we need to see it, how it behaves from there, and also, very importantly, we need to see how the CCI behaves as well. Also, we've got this bullish backtest and a bearish backtest. You can see there a few times our entry is averaged down, and the way to avoid those, you can see here, for example, the bullish backtest averaged down during that decline, and the way to avoid that and these others is you always, as I said in the beginning, you trade in a direction when the weekly and the daily align. So during that period from around about March 23, during that period, there was bullish momentum on the weekly, and that align with those bullish movements on the daily. You take those same bullish trades on the hourly chart. So that's how you trade that. And during that period between April 22, going back to April 22, you can see there the bearish trades versus the bearish trades on the weekly. You would have taken bearish trades on the hourly. To understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.